Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 17th. Hey, I apologize. It's kind of a late day today. I had a bunch of appointments this morning, so we're going to catch it just before the close. We got about 12:40 Pacific Standard Time, and the bond market closes up at 2 o'clock. So we'll kind of get a late day view here of where the market currently is. So with economic news releases scheduled for today, we have the weekly jobless claims that we get every week. Obviously, this is the people applying for unemployment. Now, last week it was reported 372. It was actually revised slightly higher from I believe it was 370 up to 372,000 people applying for unemployment. So they figure it would be the forecast for this week would be about 368, kind of within that range. But we had a really surprising drop. This is actually the lowest we've had in several years at 335,000. So this is great news. Fewer people applying for unemployment. So the market obviously is going to be liking this. Second item to note today is the housing starts for the month of December. So back in November we had 851,000 housing starts, and it was forecasted it was just a slight improvement, about 883. It came up at 954,000. So great numbers right there, about 100,000 improvement from the month of November. So fantastic news what we could see here on the housing starts. Now we also had the Philadelphia Fed for the month of January's numbers, and what this is the manufacturing for the Philadelphia region. So back in December, after a couple months of contraction, we had an expansion of 4.6. And we figure it would be a slight improvement for the month of January, and we show contraction, so negative 5.8. So now we're going to go over to the technicals, which is the stock market. The stock market's currently up right now because they're liking the housing market news as well as the unemployment numbers. So great news we received. They're kind of shaking off the Philadelphia region, the manufacturing. This is kind of important because every recession we've had since World War II, housing has actually brought us out of those recessions. So if we can get the housing market going, that's a good sign for us to kind of get out of recessions. And even though we're technically not in a recession right now, but the economy has been very slow moving. So let's go ahead and jump over to the bond market, see how this is faring. So obviously the good news is taking money out of the bond market, putting it into the stock market. So interest rates are taking a little bit of a beating today. We're actually, as we can see, we've touched on even negative 21. We've had negative pricing alerts so far today. So we've actually had prices going up as the day went on today. So we have this huge negative opening gap to the negative. So we started off the morning with that good news, which was bad news for the bonds. And on top of it, we've had more of a decline, but we pulled back a little bit so far. Later this afternoon, we were actually at negative 21 at one point, as you can see by this tail down here, and it's pulled back. Now we're currently about 12 basis points lower. So currently we're about almost about 35 basis points from where we left off yesterday, from up here. So that is obviously room for negative pricing. So our interest rates went up slightly from yesterday. All right, so be a little cautious. We could have some improvement. Again, these opening gaps typically have improvements. We usually close them up. So we do have some room for there. But in the meantime, we did have a worsening in the interest rates today. All right, tomorrow we do got to be aware. We do got the Michigan sentiment. So this will give us a gauge as to what the consumers are feeling about things, and that perception of becomes reality. So if people are feeling good about things, they're out spending things, and usually that perception becomes a reality out there. So we'll have to kind of keep an eye on consumer sentiment tomorrow. See if we have good news, bad news, to see if people are still feeling better about the economy after elections and everything. So we'll call that a day here. I hope you guys have a wonderful day. Thanks for stopping by. Again, sorry for the late notice here. We will see you guys tomorrow. And if you guys stop by mikesdailymarketreport.com. If you'd like to get these emailed to you, once I get these uploaded, you'll have these emailed to you. We do not share your information, nor do we send you anything but these videos. All right, have a wonderful day. See you tomorrow.